What's going on, guys? It's GBP baby. Welcome to another video. It's currently 11:41 p.m. on Tuesday the 19th of September. And yeah, we're going to get straight into the charts. We've got FOMC, we've got the Fed interest rate decision tomorrow. So that's one thing I want us to take note of before we jump into the charts. And yeah, we'll look at today's price action. This is Tuesday's price action. You can see we did trade through that daily fair value gap, as I was stating. I was anticipating this move lower. However, we didn't close lower. Now, yesterday, if you watch yesterday's video, you know that I said I wanted to see lower prices now. I wanted to see us push. If we push through the daily fair value gap, then I'll start looking for more lows to get taken out. However, the fact that we pulled right back on ourselves and actually closed higher at the end of the day makes this move almost like a hint to this being the low of the week. And I say that because look at how we've respected the top of that fair value gap. Although we've wicked through it, and we've taken out all those stops and traded right down into this implied fair value gap that I have marked out here. You can see we traded and it looks like we're going to close higher. And because of this, now I anticipate a move up into buy side liquidity resting here. So if we were to close lower, it would have been a different story. I would have expected lower prices because that would show bearishness. However, the daily fair value gap is continuing to show support even though we've wicked through it. So that's one thing to take into consideration. But tomorrow I'd like to see us start to move back up into that buy side liquidity, that monthly consequent encroachment, and potentially that monthly volume imbalance I've been speaking about for the whole week. One thing to take into account though is we have another volume imbalance here, so we want to see how price treats that. We want to see if we can trade through that or not. So that's definitely a place to take note of on the daily. And yeah, so we'll jump down to the 4 hour, and we can look at price action. You can see we traded down aggressively, and then we dipped even lower, completely filling in this 4 hour fair value gap. So this range is now, this is now a balanced price range from this high to this low on the 4 hour. So now this fair value gap has been completely traded, which is nice to see. And if we look at the consequent encroachment of that, you'll see that volume is proceeding to respect that. So if we mark this out like so, 949, which is just here, you can see our volume is remaining above that 50% level. Again, showing respect. When price respects 50% levels, it can show bullish nature. So that's nice to see. And you can see we traded up, and now we have this we have this inversion fair value gap, that has now formed here. Now we do have these relative equal highs. I've had my eyes on for a while. I do like the way we came down, grabbed these sell stops resting here. So this sell side liquidity is now being grabbed, as far as I'm concerned. Let me just sell side liquidity. So that's being grabbed. So now I'd like to see a move higher, and I'd like to see these relative equal highs resting here get taken, and a push up into this buy side liquidity and that monthly consequent encroachment. So that's what I've got my eyes set on. So now I'm expecting higher dollar tomorrow, but again, with the interest rate announcement this week already has been quite not confusing, so to speak. We've had if this is the low of the week, then this is the classic Tuesday low of week. So there's not really nothing to be too concerned about. But yeah, it would be nice to see us maintain respect of this inversion fair value gap. I'm just going to write inversion fair value gap here. Why is it an inversion fair value gap? Because we traded down on the downside, creating the fair value gap, and then we traded back through it on the upside. So now we want to see if this can act and provide support. If this provides support, then I'd like to see higher prices. Again, we've got relative equal highs now, resting here and here. And then we've got all of these highs up here where we've got a lot of where we will have a lot of buy side liquidity to grab. And then we can hopefully reach for that volume imbalance, but we'll have to see what the market gives us. Now let's go to the 1 hour so we can get a better look of today's price action. I will quickly divide Monday and Tuesday's trading. We've got Tuesday starting there, we've got Monday starting there, we've got Sunday starting there, and then we have Wednesday tomorrow, which is starting here. And yeah, and then we've got Thursday onwards. So yeah, you can see we came down, grabbed all those sell stops, aggressively moved higher. You can see we came back down into this breaker block here. This is a breaker. Why? High, low, higher, high, break lower. So this makes this a breaker. This is now an inversion breaker because we traded through it on the upside. You can see we traded to that there, and we continued higher. Now, like I said, if we continue to show support, then I'd expect to run up into these relative equal highs resting here. Let me just delineate that now. We've got some beautiful buy side liquidity resting there. However, if those highs fail to get taken out, then I'd expect lower prices. So this is another if and when situation. If this happens, then this. This is where the whole algorithmic principles come into play. If we take out this buy side liquidity, I'd then want to see this buy side liquidity get tagged. If we fail to take out this buy side liquidity, then I'd expect lower prices. And that's purely because this swing high has been taken and we've traded down back into this bearish, into this, into this breaker block. So I'd anticipate an expansion into that buy side liquidity. However, if that doesn't happen, then I'd expect lower prices because it would then I'd see this as a failure swing and therefore we should hunt for lower prices. So that's my stance right now. I do think it's likely to reach for that buy side purely because we created this high on the Monday up here. So the price will likely want to grab that. And then obviously back from last week, Thursday's highs of the week here, there's going to be a lot of liquidity resting up there as well that you may want to take, assuming we are still bullish. However, like I said, if this is a failure swing, it will continue lower, and then we'd probably see an aggressive run through that implied fair value gap into these lows here. But right now, again, with interest rate decisions tomorrow, it's just a waiting game, and I'm probably not going to be trading or paying too much attention because I prefer to be out of the charts during these kind of market conditions. So let's go to GBP. We'll go to the daily. We can have a look. This is Tuesday's price action. You can see we just about took out Monday's low. We traded higher and came back down. We closed higher, just like dollar. So now we can see there's clear, clear divergence happening, because if dollar closed higher, which it did, dollar closed higher. Am I going crazy? Yeah. Assuming it closes higher. If dollar closes higher and pounds close higher, that means that there's a divergence going on, meaning that pounds going to have to do some work. If you've watched my Sunday review, you'll know that I have my eyes set on this bullish order block opening. So I'm going to quickly mark that out again because I anticipate us to draw down to that, assuming dollar wants to move higher. And you can see that this week we have failed to reach this low. So this range isn't actually balanced. So let me show you something. So this is a balanced range from here to here, because you can see the low of this week's wick was traded to with this wick. This low hasn't been traded to with this wick, and we're going to assume that this is the high of the week if we are bullish on dollar. And the fact that we've failed to trade into this wick creates a gap which shows bearishness, which shows a likely aggressive move lower for the rest of the continuation lower to reach into these lows and potentially into that monthly order block I've just marked out here. So this is the monthly order block, remember, from the monthly order block open. Let's just mark that out. So monthly OB open, middle on the right, and we'll make that black as well. But yeah, it's quite interesting really, these conditions. You can just tell, when the markets are in its you can tell when it's in the phase when the interest rate decisions are about to get made, you know. I'm marking out the 50% of this wick as well, and I'll explain why now. Let's drop that to the weekly. So this is now the highest I'd want to see price pretty much trade to create the high tomorrow. More specifically, how do I explain this? 50% of this wick. So let's mark out 50% of this wick as well. I know this doesn't make sense, guys. I'm doing a lot here. I'm kind of experimenting, but my experimentation makes sense in my head, trust me. So yeah, let me continue explaining what I was saying. So what was happening? So the weekly, yeah, we've created a gap now. Assuming we're moving lower, we've created a gap. I've now marked out 50% of that daily wick from Tuesday's price action, which is here. Let's just get rid of that monthly one because it's going to confuse us. So this is consequent encroachment. This will be the highest I'd expect price to trade to before moving lower in Wednesday's price action. So you can see we came, grabbed these buy stops resting above here. So that's buy side liquidity grabbed. So we grabbed that, and now you can see we're kind of consolidating. But yeah, one thing to note, we took sell side out here. So sell side got taken here to low, 702 low, 704. Yeah, so sell side just about got taken there, buy side got taken here. So now we're expecting some kind of sell side to get ran. But let's go to the 1 hour. Not the best price action. Not the best price action at all, really. But overall, I'm expecting lower prices on GBP, assuming dollar is going to move higher. We do have this gap here. You can see this aggressive move lower. Let me just get rid of some of these markings, just make it clear. Now this gap above, because remember this line here is that this is a confusing video, guys. Sorry, I apologize. I'm gonna start from the weekly again, and I'm gonna work from the daily, and I'm gonna work my way down. Let's go. So we have this, which is the daily consequent encroachment, daily C.E, and we'll make that red. So we know that this is the daily consequent encroachment. And then if we go down to the 1 hour now, we can see that consequent encroachment is resting right up there. Let's go to the 15 minute, and you'll see that a fair value gap is created over here. I see this now as a breakaway gap, meaning that I don't want to see price trade back into this area if we are to move lower. So this is going to be an anticipated breakaway gap, as in I anticipate this not to get traded to again if we are to move lower, because this signifies a breakaway gap, a breakaway, so that we can continue to move lower and run into these relative equal lows that we have residing below here. So we can put sell side liquidity. Let's just use array, and then we'll just mark out sell side. Yeah, so if we are to run down into the sell side liquidity, this breakaway gap should remain open. If we aren't, then it should get traded through or to, and then higher prices from then on. But again, interest rates tomorrow, so I'm not going to say too much. But yeah, you can see we've had quite a mad day. We moved way higher during New York, and then as soon as we hit 8:30, we reversed, came lower, and now we're just consolidating until an expansion that will likely happen in the London session before the Fed rate announcement. Let me see. We've got inflation rate and then the Fed interest rate decision at this time. So be careful in the markets tomorrow, guys. We've got a lot going on. But it is interesting to see we have taken out these buy stops. So, buy side liquidity has been grabbed. Where are we to go for the rest of the week, So that's one thing to take into account. Euro, finally. Let's go to the weekly. Now, again, if we're expecting higher dollar, that means we should expect lower euro. The euro's been showing a significant amount of strength that pound has not. You can see we traded through the fair value gap and then traded back below. Again, very bearish in nature. That means we do have relative equal lows as well, resting here. Although this sell side was grabbed, these are relative equal lows. Lows. So we can put sell side liquidity down there on the daily, and then it'd be nice to see if we can expand down below that. Let's drop to the 4 hour, see what we can see. Again, similar price action. We had relative equal highs, price grabbed that, and you can see we've aggressively turned away from that, and now we're kind of consolidating. And I'd likely see an expansion lower if we are to have lower prices in the Wednesday and for the rest of the week in general. So yeah, really not much, guys. Overall, I'm just expecting lower prices. In terms of euro, high of the day, tomorrow. I'd keep an eye on, let me see, because I'm looking for the breaker here, you see. If we are to move lower, then these two candles here are a breaker, because we will have a high, a low, and a higher high there, and then we break lower. So this whole range between here and here should act as a breaker, meaning that 50% of that range should act as resistance. So that's one thing to take into account. I'm going to mark that level out now, see if we can find any PD arrays on a lower time frame that might want to support that finding. And honestly, all this, guys, the way I'm annotating, if you go watch my backtesting videos, I go through all of this, so make sure to go watch some of those. But if you go to the 1 hour, you can see how, we have a breaker market structure here, we have a breaker here, we traded to it here. So this is the breaker block, high, low, higher, high, then we broke lower, and we traded to it here. so that acts as a breaker block, and then this should continue to act as a breaker block if we are to see lower prices. So I'm going to quickly draw out that. This is a lot, guys, but yeah, this is where I'd want to see price find resistance if we are to see lower prices. We have a little gap there. I'd want to see that left open, to be honest. On the hourly, let's drop to the 15-minute. Again, same as what we saw on pound, breakaway gap, price closed below this swing low. This is a breaker as well. This has been traded to here. Whether we reach up to it again, I'm not sure. I'm not going to say too much, but overall, I'm expecting lower prices again. So yeah, that's going to be everything, guys. Thanks for watching, and I'll catch you in tomorrow's video. Peace.